What if the biggest risk in your investment portfolio isn't the stock you bought? What if it's you? Imagine you buy a stock after doing your research. You believe in the company. You have a long-term plan. Then, 2 weeks later, your investment drops 15%. Suddenly, everything feels different. You start checking the price every hour. You read frightening headlines. You search for people saying the stock is going to crash. And eventually, you sell. Then something strange happens. A few months later, the stock recovers. That hurts. Not because the market beat you, but because your emotions convinced you to abandon your own plan. This is one of the biggest lessons in investment psychology. Sometimes the most expensive mistake isn't choosing the wrong investment. It's reacting to a normal situation in the wrong way. And here's where beginners get trapped. Fear makes falling prices feel more dangerous than they actually are. But greed creates the opposite illusion. Imagine your stock suddenly rises 40%. Now you feel smart. You start believing you figured out the market. You invest more money, you take bigger risks. That's when confidence quietly turns into overconfidence. Fear can make you sell too early. Greed can make you buy too much. And FOMO can make you chase something simply because everyone else seems to be making money. This is why learning how to invest in stocks as a beginner isn't only about learning how to analyze companies. It's also about learning how you behave when your money is on the line. Because the market doesn't know you're scared. It doesn't care that you need the money. It doesn't care that your friend just made money on a stock you didn't buy. The market simply moves. You are the one assigning meaning to every movement. So here's a simple question to ask yourself before making an emotional decision. If I didn't own this investment already and I saw the same information today, would I still make this decision? That question creates distance between you and the emotion. And sometimes that distance can protect you from your worst investment decisions. The goal isn't to become emotionless. You're human. Fear and excitement will always show up. The goal is to build a system strong enough that your emotions don't get to make every decision. Because before you learn how to beat the market, learn how not to sabotage yourself. Your greatest investment risk might not be the market. It might be the person staring back at you when the market moves.